So first off, congratulations for having won 3 awards at IFM's Dubai leg of awards this year.
Thank you very much.
So tell us your thoughts about winning the award, especially for the best research house.
We're very proud of what we've done, and I think the recognition, and we thank International Finance Magazine for that. It's not our first time that we win this actually, but I think this year it means a lot because it really, for us as a house, it really gives us the recognition that we are moving in the right direction in all aspects. Because today we don't look at our business as just of trading. It's part of our business is the trading is part of it, but research is a very important part of it. The mobile application also is getting closer to the clients, and I think that suite of products also all to be recognized in this year's award is very special to us. The team also are extremely happy with being recognized, especially the research. As a NBAD is a big name. However, NBAD Securities research is a small team, but they have actually in the last 3 years they were able to build a good name in terms of sell side research, whether it's technical or fundamental. And we are able to be close to our clients in a way that they start to follow us, and really we become one of the, let's say, the top 3 followed sell-side research houses in the UAE.
Excellent. Okay. So tell us a little bit about how NBAD Securities executes its research for clients. Like, what is the process really like?
Really, the research team, they should have been here with me to give you that information. Mr. Sanyalik is the head of research, there's Chief Prakash of technical, and there's Ahmed Benihani also. Between them, they divide the kind of research into a fundamental, and in the fundamental we try to cover the financials of the companies, the valuations of the companies. We try to build also through their models to try to build the expectations, the fair values of these. And that's for the long-term investor very important. For the institutional investor, these kind of information is important. We also do sectoral reports to compare sectors together. We also went into covering, we identified 4 major markets in the MENA region: UAE, Saudi, Qatar and Egypt. Those are the ones we focus on, and we try to do comparisons. So if you do telcos, you do across those to try, because our investor base, actually many of them have this kind of a GCC and MENA portfolio, and they would like to be able to know where the value is. If one is expensive or there's a problem in one of those companies in one market, they could be compensating for it in another. On the technical one, we also cover all those 4 markets we talked about, but we extensively look into the UAE, and in the technical, it's not just like a report in the morning, but it is actually a multiple kind of, it's one report in the morning, and then we have multiple we send links, triggers, if we see triggers of support or resistance in terms of those technical for our clients, the speculators of ones of them who wants to trade the market daily. So these kind of short-term triggers are very important to give them signals in order to either buy or sell. But it is, at the moment, it's morely focused on equities. We started also to do a bit more on the credit research, but it is more on a selective, and it's a smaller, limited kind of number of companies and markets. However, we plan to expand that going forward, because we see that the fixed income continues to grow interest even when equity markets recover. The fixed income interest continues to be there, whether it's sukuk or conventional.
Right. Yeah. I remember discussing that with another client earlier in the day.
Yes.
That's also quite valid. In fact, coming back to today's awards, I think I noticed a trend was how a lot of financial services with an inclusion of technology was heavily awarded.
Sure.
Yours was one of them as well,
Sure.
with a new application that you've launched. So can you tell us a little bit about that?
I mean, today technology has stopped becoming a kind of something that it's nice to have, and now it's a must-have. It's a necessity. You cannot talk about having a financial services and not having technology implemented heavily.
Right.
What we did I think it was a step in the right direction, but if you compare it to some of those apps we see in the international markets, we still have some work to go. But what's important is that now our investor base has started to rely more on this technology. And therefore we see them now asking more questions or things to be done there. So it's not just a trading app where you can just put the order to buy and sell. There's also the kind of for the speculators. There are those triggers to buy and sell. There's a bit of more research if they want to go. But really, it's just to give you a window or to keep you connected to your portfolio and to your investment if you wanted to on the move. There are the buzzwords now in the financial services is the Fintech and the blockchain technology. We see the markets here in the UAE, like ADX, have implemented blockchain in distributing of dividend for companies. We see Dubai investing also, DFM and both Dubai have announced about Fintech, also some association with one of the big international houses. And I think what you're going to see is going forward is much more advancement and trying to catch up with what you've seen similar markets or similar kind of companies in the developed markets. We still are a bit behind, but we are all moving in that direction.
Right. It's interesting that you brought up fintech and especially with respect to the UAE. I mean, we have the Abu Dhabi Global Market, which also has a very active division with respect to capital markets. As a
they made some announcements also on that.
Absolutely. So how do you think something as explorative as fintech would be can actually fit into the mold of regulation? I mean, do you think that these two entities, which obviously are seemingly in very opposite directions, do you think they can find common ground?
I think they should and they will, because today financial technology, the threats today on the financial sector, one of the biggest threats that have been established by most of the CEOs or even governor of central banks in the past 3 years is the fear of hacking of their financial kind of environment and financial services members. We all know about the Central Bank of Bangladesh, where they had this hacking and they lost some money there. And I think now it's no more a luxury, it's now a necessity, and I think everybody is investing in it. Regulating it is important in the sense that you ensure that you build a standard in the country whereby you're able to monitor those kinds of developments and to ensure that you as a regulator continue to be responsible for the financial services under you. Without you putting those regulations, you may see developments going maybe in directions that you find make it very difficult for you to continue to regulate. And that's why I think ADGM has moved, and I think all central banks will have to go that direction soon.
Right. Can you tell us a little bit about the role of capital markets in the coming year, and especially with respect to UAE and maybe even GCC at large?
2016 was a tough year in the GCC equity markets. It was mainly because when oil prices were down, and so the effects and the spending and the deficits with the governments. We see 2017 as a possibility of a better year. I definitely don't see why 17 should be worse than 16. If anything, if you look around, oil prices are expected to be on average higher than 2016. The average in 2016 was around $44 per barrel. Most expectations now are talking for 2017 range of 58.5 to 58. That's a 25 to 30% increase. That for some countries in the GCC would be a good level that they can cover the deficits. And I think companies will be able to overcome some of the difficulties they had in 2016. What we see coming from the international markets, especially the US, and we see the positive movement we see, if that continues, that's going to be also a positive catalyst. The increase of interest rates twice or three times, depending on how it goes this year, that usually is good for banking sector, because that means that their net interest margins can increase, and therefore that could give them some kind of room to grow, and therefore that could represent some growth for them. On the real estate sector, which is very important for us in the GCC, we see a slowdown in terms of the new projects announced, which is, I think, part of managing the supply in order until the demand grows. So overall, we think 2017 we're hoping for it to be a better year in terms of traded value and in terms of performance of the index. Okay, great. All right. So you mentioned the US, and I couldn't help but remember, obviously, that's the most obvious question, with President Donald Trump, who's officially taken over. And then, of course, in March, we're expecting some big announcements from the UK, from Theresa May, the Prime Minister, with respect to Brexit. So how much of an impact are these decisions and these developments, at least on the international front, how much of an impact are they going to have on the UAE, for instance? I'll tell you what, we in the GCC, especially the UAE and Qatar and Egypt, the international investor represents around 25 to 35% of the traded value. We are part of the MSCI Emerging Market Index, so therefore we have billions of dollars in terms of funds invested in our markets. So anything that happens into the international politics, which affects those international markets, will have an impact on us. The two major parts, as you talked about, is that I think is the equity markets there, if there's an issue there, and the currencies, because everything today, a lot of people believe that we are seeing a kind of stealth mode of currency war going on, and if there is devaluation of currencies, big movements, that will have an impact on allocations into portfolios, and that may also have a trickle down to the internationals. Investments in the GCC markets. So it is a complex kind of effect, but I think there is an effect. We've seen that happen. It's not in our control. So what's in our control, I think, is our companies is to focus on grow their profits. We will focus on trying to serving our clients. We will try to be a bit more closer to them in terms of educating them in order to minimize the risks, if you want, that they may go through. But at the end of the day, these kind of effects, if they come from outside, we just have to manage and
Stay afloat.
Maybe yeah, to try to minimize the negative effects of them.
Minimize the shock in a sense, I
Yes.
guess. You also mentioned construction. I picked on that, and of course, one can't help but notice how construction is pretty much on the upswing ever since 2014. If
Yes.
anything at all, I think that one particular sector has managed to keep its presence going, in this region. So. We're also nearing the date of Expo 2020. We're officially 3 years away. So, what can you tell us about the expected infrastructure spend, and especially keeping in mind the construction sector?
I'll tell you, the infrastructure spend, we really are very positive about the commitments now coming. We're in 2017, towards the end of the year, we expect many of the big projects to be awarded because to be delivered before 2020. And we think, although that have a major impact on Dubai as an emirate, but I think it will benefit UAE because many companies will have to come in. On the construction sector in particular, the companies that we have listed in the market, we're not very positive at the moment. I think they are still in recovery mode from the slowdowns of the last year and the year before. There are some success stories in the construction sector, but they are not public companies. The ones which are public companies we would advise we think the valuations now are still on the expensive side. And I think investors should be there are better investor opportunities in the public market. If you are a long-term investor, we're talking about 2-3 years, if you're interested in that, so maybe it could be a time to start to pick slowly, but it will not be the star performer this year, I think.
Okay, all right. And you mentioned about how there is a certain positivity about the oil prices this year. And in fact, now last I checked, it was 53 a barrel. So is it really hopeful to expect it to touch 60, and will OPEC cuts continue, and how is that going to affect the commodities market?
Overall, we were positive on oil, as you said, and as we think an average of 55 to 58 is what we will see in 2017. That's about 25 to 30% higher than what we saw in 2016 as an average of 44. Of course, there are a lot of ifs and buts in everything, but we have at least an agreement till the first 6 months of the year by OPEC and non-OPEC countries. And it looks like what we see in the numbers that are coming out in the market now shows that everybody is complying.
That's true.
The unknown factor here is that if the price goes up to the 58 level, the production in USA is increasing, the shale gas production.
Exactly.
And if they start to be aggressive in terms to exporting that oil, and then we could have a price war again, which may have its negative effects. At the moment, from what we see, we're just focusing on this part of the world. We think it's going to be a positive effect on oil. The uncertainty because of the politics is helping gold at the beginning of the year. What we've noticed is gold as a commodity is actually being there because people don't like the risks of the uncertainty of the politics are moving people a bit to gold. So it's like to recover a bit. If we talk about infrastructure in the US, if the plans of the President Donald Trump really swing into action, You may see demand on commodities, things that are used for infrastructure products to be there, and that would be positive. So for now, for the first at least quarter or first half of 2017, we think commodities should be on the plus side. Even if you look apart from what's happening in China, the growth we see is a bit higher than expected. It's not a lot, but it's higher. So if the demand continues from those developed economies, then commodities should be okay, at least for the first 3 to 6 months of 2017.
So overall, a pretty positive outlook. At least till
We try.
June, we're looking good.
Correct.
Thank you so much for your time.
It's
It
my
was an
pleasure.
absolute pleasure having you.
Thank you very
Thank
much.
you.
Thank you.